Well, after finishing up with shareholders at the company's AGM in Sydney, Lynas's executive chairman Nick Curtis joined me a short time ago. Nick Curtis, welcome to Lateline Business.
Thank you.
Well, you've announced today a $300 million deal with the Japanese. Are there any more details? Because Sojitz is a trading company, presumably not the end customer.
Yes, well, there are a few more details that we've just announced, actually, because the earlier announcements were not the official announcement. The detail is that we are entering into a strategic alliance with Sojitz, a major trading house in Japan and the biggest presence in rare earth distribution in Japan, for a long-term supply of material for the Japanese market. We're reserving 8,000 tonnes a year for 10 years as a minimum. And in return, and as part of the package, Sojitz and JOGMEC, an arm of the Japanese government, are looking to finance us for $250 million, in fact, to expand our production, in fact, double our production of rare earths.
Thanks to the 40% reduction in the Chinese export quota, the hole in global supply is not expected to be filled, I think, until 2015. Why does it take such a long time for operations to crank up?
Well, mining is a long lead time business. You need to find the deposit, you need to develop the engineering and capacity, you need to finance it, and then you need to start producing. It's taken us 10 years to get to this point of production now. 5 years is a good effort if you're just starting with something in the ground.
Presumably we've got major companies all over the world now scrambling for supply. Beyond the French chemical company Rhodia, you're quite secretive about your 6 or so other customers. Why?
Well, most of them are currently buying from traders in China, and they just don't want to impact the relationship they have with the trader with the possibility that a long-term relationship with an alternate supplier might be viewed negatively. So so
it really is quite a commercial in confidence situation?
Yes, it is.
Right. Now, if I'm looking to invest in Lynas, should I be worried that the Chinese might at any time down the track decide to dump rare earths onto the open market? I mean, they did something like this in 2002, didn't they? And they completely destroyed Molycorp, which is the then biggest mine in California.
Look, for a long time, China has been growing their capacity in rare earths as a commodity producer. And in fact, they've let it go to a slightly chaotic state. What's happened is the government's now taken control of what's been a chaotic and damaging industry environmentally in parts, and controlling it in a more rational, reasoned way, and really for use in China. I don't see any risk of them dumping the market in the future. I think they need all the material that they can, given the new China, the China of technology, the China of growth. And with that, I think they may even turn into a net importer of rare earths over the next 5 to 10 years.
Nevertheless, they've got a history of being quite strategic when it suits them. You don't see that as a major risk over the next few years?
I think they want their material for China. I don't think they want to dump material into the outside world for a commodity they consider a valuable and important resource.
Well, Nick, you've had an interesting AGM today. You're cashed up with your $450 million share issue from last year. And you've now given yourself options over 9 million shares. That's for you. And over 1 million shares for each of your non-executive directors. Now, they're exercisable in 3 years' time, but they're well in the money now. I mean, either this is a hell of a thank you for you guys, or you don't have much faith in your share price going out.
No, I don't think that's an accurate representation on either count. Just to say, I didn't grant myself options. The board, in its wisdom outside of me, decided that was an appropriate remuneration after looking at comparative measures for other companies in the industry. Remember, 9 million sounds like a lot of shares, but we have a lot of shares on issue, so as a percentage of the company, it's really very small. The issue of the price is that at the time the options were issued, they were at a significant premium to the then price. I think we all know there's been a very exciting ride in the rare earth price, so between August, when they were issued, and today, the price has risen beyond the strike price.
Were you surprised that up to 40%, I think, of your stakeholders disapproved of it, though?
Look, we understand they didn't disapprove of my options, in particular the executive options. They generally disapprove of non-executive directors getting options, and that's a well-stated governance issue, and we hear them loud and clear. And in return for hearing them loud and clear, we've had a meeting and made announcements to the effect that we will not issue non-executive directors options in future. I think it's very important that we listen to the voice of the shareholders and we adapt accordingly, and that's what we're doing.
Well, you'll be the first company in Australia to produce rare earths, I think in the third quarter of 2011. What's got to happen before this?
We've got to finish construction of our mine in Western Australia and complete construction of a fairly significant chemical plant on the east coast of Malaysia in Kuantan. And we expect to have both those plants commissioned for production in the fourth quarter of 2011, effectively.
Why did you choose Malaysia for the chemical plant?
Well, the product that we move out of Australia is a high-value product, so transportation globally is not a significant cost burden for us. We're only producing 33,000 tonnes of concentrate, for example, in the first phase, so it's not iron ore where you're moving huge tonnage. We move it, therefore, to a location where there's an advantage for us, which is an existing chemical park where we can get the relevant chemicals, where there's sufficient water, where there's gas and cheap energy, where there's good skilled labour, and on the east coast of Malaysia there is good skilled labour. The Malaysian government was very receptive and gave us appropriate incentives. So overall, after a global survey, we found the east coast of Malaysia was the right location for this plant, and we're very pleased with that decision. And
back to China again for the last one. Clearly they feel that a big issue is value add to their rare earths business, and they're going to be doing a lot, presumably, up the chain in terms of manufacturing as well. Do you ever see a time where Australia might get into serious value add for rare earths?
I think that the Australian government needs to look at how it can incent and support material science technology being value added in Malaysia. We have great skills at academic level in material science, CSIRO and such like. And as we develop capacity to, say, for example, make sophisticated magnets, I'd like to see that end of the supply chain in Australia. But it does require a concerted conversation about our role in advanced materials technology.
Well, Nick Curtis, a very exciting time for you and your company. Thank you very much for talking to Lateline Business.
My pleasure. Thank you very much.